Among the more notable instances of collateral damage from the collapse of Lehman Brothers a year ago was the demise of a once fashionable concept of decoupling. Well, to discuss this issue further with us, I'm now joined by Leon Perera. He's Group Managing Director of Spire Research and Consulting. So, Leon, China's economic growth hit 7.9% in Q2, and of course, the rest of Asia is right now in recovery, while the United States is still in recession. Is economic decoupling back from the dead?
Good morning, Jenny. Well, I think you make an interesting point because the theory of economic decoupling is seeing something of a revival. But of course, in reality, it was never a case of whether there is or whether there isn't decoupling, but the degree of decoupling. There is a weaker and stronger decoupling depending on the country that you're looking at. And within Asia, there are two stories. There are the big emerging economies, and I think there is a weaker coupling in those economies because they do gain a lot of growth momentum from domestic sources, from domestic consumer demand, from government spending. They have the basic emerging market dynamic of people moving from rural to urban areas, from the informal to the formal economy. And they are fundamentally competitive in the global economy in terms of exports, of not just manufactured products, but even commodities, services, and labor, and also for investment. So I think here we're talking about China, India, and Indonesia. They do have a weaker coupling with the West. And I think when you look at the more open trade-dependent, more developed economies of Asia, such as Korea, Taiwan, Hong Kong, Singapore, and so on, and even to some extent Malaysia, I think the coupling is much stronger. But I think having said that, it's important to note that even for the big emerging economies, there is no question of absolute decoupling. The growth rate that you mentioned for China, 7.9%, is still far below what China saw in the heydays of 2007, 2008 of 10 or 11%. That does reflect the impact of what's going on in the West.
Okay, staying on this issue, the Dow is up about 45% since its year low in early March. Now, for the same period, the Chinese markets in Shanghai up 75%, in Hong Kong up 87%, trade-dependent Singapore is up about 80%. Is market decoupling a valid story?
Well, I'm less optimistic about market decoupling when you look at the stock markets, because I think fundamentally the stock markets in Asia still take their broad direction from what happens in Wall Street. The directionality, I think, is still very closely tied to Wall Street. The size of the swing, the magnitude may actually be different. I think this depends on really the starting point. I think Asian markets actually suffered more back in late 2008. I think the China factors actually come in. The China market now has a much bigger influence on Asian stock markets than it did previously. And the China market is very driven by retail investors, to some extent by speculation. But I think the basic direction is still there. I think if there wasn't a positive story of a turnaround and a gradual return to growth in the US to underpin the numbers that we're seeing in Asia, I don't think we'd be seeing so much growth in the stock market here in Asia.
The next critical question now is how long can Asian economies decouple from the West, if indeed they have decoupled?
Well, I think if you look at the big emerging economies, China, India, to some extent Indonesia, they do have a lot of internally generated growth momentum. I think what has happened with this particular crisis is that it has knocked about 2 percentage points of GDP growth in China, India, and Indonesia as well. So I think there has been a weaker coupling, and I think their own growth is powering them forward, which is very notable. But I think for the more developed and more trade-dependent and open economies, Korea, Taiwan, Singapore, and so on, I think the coupling is much stronger, and I think the direction is, the linkage is much, much stronger with what's going on in the G3. So I think on this question, the bottom line really is that can we see a situation where there is a major crisis in the G3 economies of the US, Europe, and Japan, and there is a negligible effect or no effect in Asia? Can we see decoupling to that extent? I think the answer is no, absolutely not in our lifetimes. But if we ask ourselves the question, will this coupling get weaker and weaker as we move forward into the future and Asia starts to develop into a fundamental alternative center of the global economy? Then the answer is absolutely yes.
Leon, we've got a minute to go. So that is as far as economies are concerned. But how about the markets? At this stage of the stock market advance, if we're in a recovery, how strong can it be?
Well, I think the stock market can't really defy gravity I think it has to be tied to the fundamentals of the economy, because you do come back to corporate profits and how those are being reported. I think if you look at the trend of the economic growth that we're going to be seeing in the next few months and into next year, I think in the world as a whole, Spire has predicted we will return to growth in Q4, but it will not be strong growth. The world economy is still working through many problems to do with the high unemployment in the developed countries, the prospect of commodity prices creeping upwards, the fact that the financial system still needs to be nursed back to health. So it will be a return to weak growth, not to roaring growth. So to that extent, I think the stock market can't keep on defying gravity, and there will be limits to the kind of exuberance that we are seeing in stock markets globally.
Thank you, Leon, for your insights. Leon Perera, Group Managing Director of Spire Research and Consulting.